Welcome back to Candlestick Signals for today's market. September 17th, 2025. Brace yourselves for a rollercoaster ride as we dive into the most intriguing candlestick signals shaping today's trading landscape. From bullish engulfing patterns in tech to bearish harami in utilities, we're about to uncover the hidden messages behind every 15-minute chart. Buckle up, traders. This is not your average market recap. Today's stock market opened with moderate volatility as traders positioned themselves ahead of key macro announcements, resulting in significant sector rotation and divergent momentum across major indices. The technology and banking sectors led the charge with impressive gains, while utilities and energy faced considerable bearish pressure. What's particularly noteworthy is the dominance of intraday 15-minute candlestick patterns across global exchanges, offering high-probability setups for both swing and intraday traders. Let's start by examining the candlestick structure that defined today's market movements. Our analysis primarily utilized the 15-minute candlestick duration, which has proven highly effective in capturing real-time reversals and continuations. In the technology and communications sectors, we observed a plethora of bullish marubozu, hammer, and engulfing formations. These positive signals were in stark contrast to the bearish harami and hanging man patterns that plagued the utilities and energy sectors. Interestingly, morning and evening star formations frequently appeared in consolidation zones, adding another layer of complexity to today's trading environment. Diving deeper into the technical interpretation, the technology sector, especially small and mid-cap stocks, exhibited remarkably strong bullish setups. These were supported by bullish engulfing and hammer candlestick structures, indicating potential undervaluation and robust retail momentum. The sector saw an impressive gain of 6.2% today, translating to a market capitalization change of $47 billion. The bullish momentum peaked at 2:15 p.m. EST, when a series of consecutive bullish engulfing patterns formed on the 15-minute chart, signaling a potential continuation of the uptrend. Banking stocks outperformed on the back of 15-minute golden cross triggers, with the sector posting a 4.8% increase and a market capitalization change of $32 billion. The strongest bullish signals in banking emerged around 10:45 a.m. EST, characterized by a cluster of bullish marubozu candles on high volume. This suggests a high-conviction move by institutional investors, potentially setting the stage for further gains in the coming days. On the flip side, utilities and energy showed persistent bearish reversal signals, suggesting overvaluation and increased correction risk. The utilities sector was hit particularly hard, declining by 3.5% and shedding $18 billion in market cap. The bearish sentiment in utilities reached its peak at 1:30 p.m. when a textbook bearish harami pattern formed on the 15-minute chart, triggering a cascade of sell orders. Similarly, the energy sector faced headwinds, dropping 2.8% and losing $22 billion in market value. The sector's downtrend was confirmed by a series of hanging man patterns that appeared consistently throughout the trading day, with the most pronounced formation occurring at 11:15 a.m. EST. The financial sector presented mixed signals, with doji formations dominating the 15-minute charts, highlighting market uncertainty and the prospect of increased volatility. Despite the ambiguous signals, the sector managed a modest gain of 1.2%, equating to a $9 billion increase in market capitalization. The doji patterns were most prevalent between 12:30 p.m. and 1:45 p.m. EST, suggesting a period of indecision among traders before the sector found some directional momentum in the late afternoon. In the realm of small caps, we witnessed an exciting display of Morningstar and marubozu breakouts, suggesting fresh swing setups amid increasing retail participation. The Russell 2000, representing small-cap stocks, surged by 3.7%, adding $24 billion to its market cap. The most significant breakout occurred at 11:30 a.m. EST, when a powerful Morningstar pattern formed on the 15-minute chart, signaling the start of a strong bullish trend that persisted throughout the day. Analyzing the sector pattern count by capitalization reveals some interesting trends. In the technology sector, the majority of bullish patterns, including engulfing and hammer formations, were concentrated in mid and small-cap stocks. This suggests that smaller, potentially more agile tech companies are currently attracting the most positive momentum. Conversely, in the utilities and energy sectors, the highest count of bearish patterns, such as harami and hanging man formations, were observed in large-cap stocks. This indicates that the market may be pricing in higher risks or lower growth prospects for the industry giants in these sectors. The prevailing market sentiment appears cautiously bullish in technology and banking, with intraday technical signals offering high-probability long entry zones. The technology sector in particular seems poised for further gains, with its bullish engulfing and hammer patterns suggesting strong buying pressure. Banking stocks buoyed by golden cross and marubozu signals also present an optimistic outlook, especially given their high relative capitalization. However, traders should exercise caution when approaching the utilities and energy sectors. The high count of bearish harami and hanging man patterns, especially in large-cap utilities, points to significant overvaluation risks. This bearish sentiment is further confirmed by various technical standards, suggesting that these sectors may face continued downward pressure in the near term. It's worth noting that retail and institutional flows are concentrating in sectors with the most bullish candlestick counts. This trend is particularly evident in the technology and banking sectors, where we've seen a surge in trading volume coinciding with the formation of bullish patterns. Meanwhile, the consolidation observed in the financial sector, characterized by doji formations, portends potential volatility spikes following upcoming macro announcements. In conclusion, today's candlestick analysis highlights technology and banking as the leading bullish sectors, driven by strong 15-minute chart formations and undervalued opportunities, particularly in mid and small cap groups. The technology sector's 6.2% gain and $47 billion market cap increase, coupled with banking's 4.8% rise and $32 billion growth, underscore the robust momentum in these areas. Conversely, utilities and energy display the most bearish signals, with large-cap overvaluation suggesting caution for new positions. The 3.5% decline in utilities and 2.8% drop in energy, resulting in market cap losses of $18 billion and $22 billion respectively, reflect the significant headwinds these sectors face. The use of 15-minute candlestick intervals has provided precise short-term trading setups, while the overall technical structure and sentiment call for strict risk management amidst sector volatility. For actionable intraday and swing trades, prioritize momentum sectors with confirmed bullish pattern counts and undervaluation, while hedging exposures in overvalued bearish sectors. As we move forward, keep a close eye on the small cap space, where today's 3.7% gain and $24 billion market cap increase suggests growing opportunities for nimble traders. Remember, in the ever-changing world of market technicals, today's patterns are tomorrow's profits or losses. Thank you so much for watching. I hoped this video helped you out. We will see you back here tomorrow. Before you go, please leave a comment, smash that like button, subscribe and click the bell to be notified when new content is available. The information presented in this report is intended solely for entertainment and informational purposes and does not constitute financial, investment, or trading advice. All opinions, analysis, and statements expressed herein are personal views and are not recommendations to buy, sell, or hold any securities or assets. Market data and any related commentary are provided as is and may not be accurate, complete, or up to date. Neither the author nor the publisher assumes any liability for financial losses, damages, or other consequences resulting from actions taken based on the information contained in this content. Please consult with a qualified financial advisor or conduct your own independent research before making any investment decisions. Investing in financial markets involves risk, including the potential loss of principal. This content is purely for entertainment purposes and should not be relied upon for any financial decisions.